as it relates to real estate, there was a follow-on question here, Wayman. I'll read it to you. If there's another financial crisis this year, what would the impact be to our various real estate SPIRE pools, which includes SPIRE, our main SPIRE LP, SPIRE US, and SPIRE Value Add? And do we have any plans in this type of economic financial crisis type scenario?
If there was another financial crash, I want to look back to 2009 when we had hard times in the marketplace. And at that time, we didn't lose any of our income, so our cash flow continued through that period of time. I would expect, looking at the portfolio, the assets, the tenants, and the occupancy that we have right now, if we were to get a crash in 2016, we wouldn't see much change in our actual cash flow that we'd be receiving from our assets. We really like the high occupancy that we've got. We like the diversification of the different markets and the different asset classes. So I think that we actually have built a defensive portfolio that could withstand a financial crisis. Would there be some pain? Would we have to manage it intensively? We're already doing that, but I think we would be okay. And prices would come back as they typically do, and we would have good, solid cash flow in the meantime.
Let me add a couple of comments to that. So in 2007, 8, 9, in a period of about 18 months, in Canada, the REIT index, or the publicly traded real estate companies, dropped in value by 70%, so more than the stock market did. The actual real estate transactions that were going on dropped in the same period of time by 10%. So the stock market had a massive overreaction to what the underlying assets were. So in 2007, a lot of REITs were trading at around 30% above the underlying value of the real estate they held. By 2009, they were trading at about 40% below. The cheapest place to buy real estate for the first time in a long time was in the stock market. One advantage, and as Wayman talks about, is because we're not using high degrees of leverage, we have positive cash flow. We were net buyers of REITs during that entire period of time. So we were able to buy something at a much lower price than it could be replaced for. And this goes back to the whole issue of rebalancing. We're net buyers of assets all the time. We don't always want the price to go up. There's nothing quite like a really good crisis to give us an opportunity to add to a portfolio on a really attractive basis. So we don't really concern ourselves too much with whether or not a particular crisis may or may not unfold. We would like the opportunity, at least once every few years, to be able to buy attractive assets at lower prices, even if it means that for a period of time, our net asset value of our assets may drop. That's perfectly okay. We're seeing that right now this year with preferred shares. We've seen it before with real estate. We're likely to see it at some point in the future. We'll be pretty good with that.